another thing about partnership accounts is that there cannot be more than 20 partners in a business, because partners are usually, when you look at normal businesses, there are usually minimum 2 partners required. As I said, it is owned by 2 plus people. You can't have a partnership business and with only one person, because then that will be a sole trader business. So minimum is 2 people, maximum is 20 people. Maximum limit is equal to 20. Okay, so that was another thing. And at the end of the financial year, as you all know it, a business always prepares an income statement and a balance sheet. And just like the other businesses, the partnership business will also prepare an income statement and a balance sheet. But the partnership's final accounts are quite different from the other businesses. So they have a different format altogether, which I will explain later on. So first of all, they'll create an income statement, okay, and then they'll also create a balance sheet, just like all other businesses. But in addition to these 2 financial statements, there's one more financial statement which is prepared as only in the partnership accounts. That financial statement is known as the profit and loss appropriation account. I'll explain that later. But for now, there are 3 types of financial statements in the partnership accounts. So there is the profit and loss appropriation account. So these were a few facts about the partnership accounts. The next thing which I'm going to tell you about is the advantages and disadvantages of partnership businesses. First of all, I'm going to write the advantages, and on the right hand side I'll write the disadvantages. So first of all, in a partnership business, when 2 or more people are running a business and starting a business, more capital will be available. So, I'm sorry. Yeah, as I was saying, so if there are more people starting a business, more finance available. So additional finance available. And now I think we'll do one advantage and one disadvantage. So another disadvantage for partnership is that the profits have to be shared among the partners, unlike the sole trader business where all the profits are kept by the owner, all the profits, and he doesn't have to share anything to anyone because he is the one who started the business all alone. But in this case, the profits have to be shared. The next advantage which I'm going to tell you is that additional knowledge, experience and skills are available from the other partners. If the other partner has some particular skill that could be applied to the good use of the business. So additional knowledge, I can just put a plus over here. Skills and experience, if any, is available to the business. And another disadvantage for the partnership is that the decisions have to be recognized by all partners. So by all partners. Now, what does this decision have to be recognized by all partners mean? It is basically like in a sole trader, all the decisions are taken by the sole trader himself. So he doesn't have to consent with anyone. He takes all the decisions by himself, whether it may be a right decision or wrong decision. But in a partnership, the decisions have to be recognized by all partners. Without, even if one partner does not agree with it, the decision, there's a high possibility that the decision may not be taken at all. So basically, if there are more than two partners usually, so they'll be put to a vote. So if the majority votes for that decision, then it will be passed. If not, then the decision will be, let's say, kept for future references. Following another advantage is that the risks are shared. In a sole trader business, the risks has to be borne by the ultimate owner. But in a partnership business, the risks are shared. So there's a not slight possibility, but the thing is that even if the business goes in a loss, there won't be like a one single person who bears all that loss. The loss will also be shared within the partners. So as just as the profit is shared, the loss will also be shared within the partners. So if not just one person's personal belongings can be taken, other partners also personal belongings may be taken. So that's one advantage. Following that, the another disadvantage is that if one partner takes a rash decision, the other partners also have to bear with him. So that is one thing. So the whole business may suffer a loss because of one partner. So one partners may damage the others. One last disadvantage which I'm going to tell you about, advantage which I'm going to tell you about is that discussions can take place. So when there's a sole trader, you can't discuss with anybody. Like you may have a consultant, but you can't discuss with any other owner of the business because you are the one and sole owner. But over here, discussions can take place which will lead to proper decision making and the proper growth of the business. But at the same time, disagreements can occur. So in that disagreement, a lot of time is wasted, which is not good for the business. And lastly, one last disadvantage is that all the partners are responsible for the debts of the business. So as I said, if the business goes into a loss, so as I said, the risk is shared. Okay, so the thing is that all the partners suffer if the business goes into a loss. All partners are responsible. Those were the advantages and disadvantages of a partnership business.